Hello, everyone. Welcome to the launch of our Edtech funding report 2023. I hope everyone's year has started well. We're excited to be back again, convening the community and hopefully providing you with some helpful insights and context. I'm Reese, Head of Research at Brighteye. We're an EdTech-focused fund and the most active fund in European EdTech, as you'll see later in the deck. Supporting founders and their teams in the early stages of pre-seed, seed, and Series A, writing checks of $250,000 to $4 million. Definition of EdTech is very broad. We support companies helping people learn and grow from age zero, effectively, so supporting parents to older learners in retirement. And you can see this spread amongst our portfolio if you'd like to take a look at that. We specialize in helping companies internationalize and reach their second, third, fourth market and beyond, as well as supporting them with their people, marketing and PR, ESG and impact work. And you can take a look at some of that work, the bits that are public on our website, or via searching up our EdTech Startup Festival, which we're delighted to be running again in 2023, which is free and open to the community. So again, we're really delighted that you're here joining us today. The structure of the session will be that I'll run through some of the top lines from the report for around 15 minutes or so, and then hand over to Akansha Dimri, founder of Tech Funding News, who will chair a fantastic panel of entrepreneurs and experts, including Brighteye partner Alex Latsis. And if you have any questions for the panel, do use the chat function. I'm sure Akansha will remind you of this when the time comes. So I'm just going to share my screen, and I guess a slight bit of housekeeping is if you're not speaking, being on mute would be awesomely helpful. Okay, so let me know if there's any issues with seeing the slides. So in venture and startup circles in 2021, 2021 was undoubtedly a boom year. Optimism that the pandemic was coming to an end, that the world was reopening, extended to ambitious founders and early teams. And indeed, this carried through to 2022, certainly in the first few months. But when pandemic-related spending cuts and rising costs of living combined with the worsening situation in Ukraine, that optimism began to ebb away, and it was replaced with a cocktail of caution, stoicism among investors and investors alike. Here are all of the items that we're going to try and cover in this presentation. Wish us luck. I think we might need it. As you can see, it's a dense report this year. But we've picked out some of the things that we hope will be most interesting to you. Following a strong start to the year for the global EdTech ecosystem, particularly for Europe, positive momentum began to slow. Funding had doubled between 2019 and 2020 and rose again to 2021, but it fell quite drastically in the second half of 2022. Despite the stark appearance of the fall in Europe, it's consistent with the wider global EdTech context, changes that we're seeing in other sectors such as health tech and fintech, and of course in the public markets. And that's something we've looked at in a report with Deal Room from October last year. It's also been widely reported that following multiple compression in public markets, venture capital valuation multiples have been dipping when compared to their 2021 levels, particularly at Series B and later stages, though specific data on this for the EdTech sector is slightly harder to come by. But as we'll go on to highlight, the scale of the drop hasn't been consistent between regions. A positive that can be drawn from the data that we've seen is that the number of deals remained roughly constant from 2021 to 2022. And so by juxtaposing the two trends, we can conclude that there was still significant appetite to invest in 2022, even as round sizes fell significantly. Considering how the macro funding figures break down by region, we can see drops on 2021 levels across all regions. However, some have demonstrated more resilience than others. For example, Europe saw a fall of 28% compared to the US, seeing a fall of 64%, China 89%, India 46%, and rest of the world 32%. So obviously Europe's figures there show some sort of signs of resilience. It bodes well for European EdTech and also for EdTech companies in regions with less previous activity, including those in the rest of the world category. And that represents quite an exciting trend. So EdTech companies raising money all around the world, enabling, as per sort of Brighteye's core thesis, the possibility for education and learning to become more affordable, relevant, efficient, and effective globally. And indeed, the gap between VC investment in Europe and the US, the leading market by investment into EdTech, that gap narrowed in 2022 to 1.7 billion from 6.8 billion in 2021. When markets mature and larger rounds become more common, we can typically expect the portion of total funding secured in the larger rounds to increase, and therefore for the portion secured in smaller, earlier rounds to decrease. However, as discussed in last year's report, the persistent dynamism of the EdTech sector has arguably led to the opposite trend. So the portion of funding raised in larger deals that we categorize as over 40 million has decreased to 44%, from a peak of 67% in 2020. And this reflects the type of deals done in 2022, with average deal sizes having reduced and a larger portion of deals being in the early stages. And this is likely the case for two key reasons. Firstly, that EdTech remains a pretty nascent sector with lots of new activity and few companies having truly reached maturity, certainly as a portion of all activity. And secondly, in 2022, the growth stage investments were slowing, and many of the funds that typically in the latest operate in the later stages began repositioning towards making earlier stage investments, and that includes, some of the huge players like SoftBank and Tiger Global. The angel data is something we looked at for the first time in this report. And naturally, it doesn't, the data we have doesn't capture all accelerator or investments that haven't been publicly announced, but it is helpful as an indication of the sorts of activities that's occurring. Angel activity in European EdTech has risen sharply since 2020, and now is the region with the highest number of angel involvements. And interestingly, Europe and the rest of the world category are the two regions to have seen an increase in angel involvements in 2022 compared to 2021. So that's something we might expect to continue regardless of the broader macro circumstances. And as the table at the bottom shows, there's a general trend in increasing angel involvements in funding rounds, and indeed 24% of deals done in 2022 included an angel investor, and you can see in the table how that's evolved over time. Looking at the largest deals that were done in global EdTech, we can see that three were done in Europe, or three were for companies with HQs in Europe. That's more than previous years. The previous highest number of European companies in the top 10 deals was one. So obviously it's nice to see that kind of progress. And again, there's a really positive broadening of markets, both geographic and product markets, which we believe represents, a deepening of the sector and a broadening of the sector. And obviously those trends are things we really like to see as an EdTech investor. Moving now into this. So in 2022, we saw limited movements towards rebalancing of funding by founding team gender. The portion of funding to female-only teams only rose by 1.4%, so from 2.6 to 4%. And the portion of funding secured by mixed teams rose to 26% from 19.6%. And while that kind of provisionally feels it's a positive step, albeit a small one, it's important to observe that this data is skewed by some of the largest deals being done by mixed teams, including Guild and Multiverse. Interestingly, when you look at the ratio of male to female funding, that ratio in Europe for last year was 1 to 27. This year it's 1 to 32, so it's got marginally worse in Europe. But in comparison in the US, that was 1 to 36 last year in 2021, and in 2022 it became 1 to 10. So that is a slight improvement, which is obviously a change in the right direction. Considering funding now by user demographics, we can observe that corporate learning was once again the vertical that attracted the most EdTech venture investment. Indeed, corporate learning was the only one of the 5 categories to increase in 2022 relative to 2021 levels. And that was partially driven by some of the larger rounds being raised by companies in the corporate learning space, including Multiverse with 220 million, Coach Hub with 200 million, and SoSafe with 73 million. and all other user verticals received less investment in 2022 than 2021. And as you can see, the steepest drops are clearly visible in pre-K and lifelong and consumer learning categories. And in terms of, I guess, thinking of the makeup of the 100% of all of this funding, 51% went to corporate learning, companies that are supporting corporate learning users, while pre-K represented less than 1%. Looking at who is making these investments, for the third year running, Brighteye is the most active investor in European EdTech with 8 new deals in 2022. 6 of the top 10 investors are EdTech specialists, which I think speaks to the benefits of having a specialism in challenging circumstances. The number of investments done by the top 10 is down on the number done in 2022. The top 10 secured 64 new investments in 2021 compared to 51 new investments in 2022. So 29 of those deals were done by EdTech specialists. The set of active investors here, as is reflected in sort of the macro figures, tend to focus on earlier stage deals. Looking briefly at the largest deals done in Europe, in 2020, 2 deals exceeded 50 million. In 2021, 11 deals exceeded 50 million, and in 2022, 7 did. As in 2021, Go Student secured the largest deal of the year with 340 million raised to further fund acquisitions and international expansion. Most of these deals, interestingly, took place in the first half of 2022, as we sort of highlighted at the top. I don't think that's surprising. Estimated valuations in this set of 2022 deals tend to be 9 times the size of the round, reflecting a lower dilution per round than observed in 2021. And the final thing to highlight, I think, on this slide is that, again, as with the sort of global largest deals, there's a really nice spread of verticals covered, suggesting a maturing of the ecosystem with significant players spread across the sector. Looking now at how activity in Europe can be categorized by individual markets, the UK retained top spot in 2022 in terms of both funding and deal numbers, though the funding total of 583 million in 2022 is down on the 2021 total. But it's still, in context, is still more than 3.5 times the levels that we saw in 2020. And UK startups were securing more than twice as many deals as the second place market, which was Germany for the first time in a number of years. And German startups were securing 363 million across 34 deals. The gap between Germany and Austria in third, again, driven largely by Go Students activity, stands at only 17 million. The market with the most significant drop in funding and deal activity is actually France. French startups raised $93 million across 19 deals, and that reflects an 81% drop in funding in 2022 compared to 2021. Spain occupies the final place in the top 5 for the first time in 5 years, but an honourable mention needs to go to Italy as the only market to see funding and deal numbers increase in an arguably challenging year, and we're going to take a quick look at that now. So Italy's tech ecosystem has been gradually on the rise, building momentum relatively consistently since 2010. It's promising that the funding secured in the market has been spread across a range of sectors, with some of the largest rounds being raised for companies in the fintech, health tech, and real estate verticals. Considering EdTech specifically, the market has been on a steep upwards trend since 2020, including 2022, during which, as mentioned, Italy was the only market in Europe to have witnessed a rise in both funding and deals. Though Italy's record funding year was in 2019, largely driven by a single deal, what's most promising, I think, in 2022 funding is that those increases have been driven by smaller, earlier stage rounds. So several companies raising in the sort of 7 to 12 million range, which bodes really well for the future of the ecosystem. And you can read more about that. There's a deeper dive that Edtech Italia and Deal Room put together last year. The lion's share of that credit for this progress must, of course, go to the fantastic Italian entrepreneurs seeking to improve and find solutions that help people to achieve better learning outcomes. But some should be reserved for Edtech Italia, the Italian government ministries, and the community of founders, investors, and community operators they are building. Looking ahead now, very briefly, we have put together our 5 predictions for the year, and you can read about them in more detail, including slightly more specific predictions in the full report. But just to run through them very quickly, we're expecting climate education and green jobs to see big growth. We're expecting K-12 infrastructure software companies to be expanding across Europe. And seeing some consolidation there. We're expecting the positioning of AI within education systems to become quite a heated subject this year, and of course start to see some companies that are really taking advantage of ChatGPT and all that it entails. We're also expecting to see apprenticeships and other higher education alternatives turning the heat up on traditional institutions. And our final one is a general trend of more consolidation in the sector via M&A as bigger players become bigger, buying market share in new markets and in adjacent categories. And as I mentioned, you can read more about these predictions in the full report. In terms of what you can expect from us in the coming weeks, we'll be writing a guide on helping you form and manage your board. That'll be ready in mid-February. And of course, thanks again to our fantastic partners at Dealroom that made the creation of this report possible. Dealroom provides a massively useful resource for founders, policymakers, and investors alike. So do check it out and claim your profile if you haven't already. So there we have it. There we have the summary. And now I'm delighted, as I mentioned at the top, to hand over to Akansha Dimri and her excellent panel, as promised. Akansha is founder and editor-in-chief at Tech Funding News, having previously held the editor-in-chief titles at both UK Tech News and Silicon Canals. So I'm sure you'll agree she's the perfect person to be leading this conversation. Over to you, Akansha. I hope you have an enjoyable conversation.
Thanks so much, Reese, for the introduction. It was a great report and really proud and honored to be moderating this event. Good afternoon and welcome everyone to today's panel discussion. It's great meeting you all. And this panel discussion circles around, as we know now, the 4th edition of the European Edtech Funding Report, which has been compiled by Brighteye, the most active edtech we see in Europe. So the report has just highlighted some significant findings, including how resilient the European edtech has been than other major edtech regions during the current challenging circumstances. As per experts, Europe is no longer dragging behind US or China or India in terms of edtech investments. Things have changed since the pandemic. At TFN, of course, we covered various rounds in the edtech in 2022. Edtech unicorns like Kahoot and Austria's GoStudent have put themselves in direct competitions with the global players. So without taking any more time, let's talk with the incredible panelists who have joined us today. Could everyone please introduce themselves one by one? I hope that's okay. Let's begin with the brilliant female founder, Alexia. Do you want to go first?
Of course. Thank you so much for having me here. I'm very excited to be launching this report alongside you because I actually used last year's report when I was doing the funding round for my startup, which was a seed round where we raised about 2.5 million. And the company that I founded is called Your Juno, and it's a financial education app for women and non-binary people. So imagining Duolingo, but for finances, essentially. And I'm excited to be sharing today a little bit more about the funding journey. I think someone's unmuted themselves. I can hear baby. I love how early we're starting the funding education now. That's great.
Yeah, that happens mostly when it's online. But yeah, that's incredible. And we have another seasoned founder who is sitting among us today, and that is Daniel. Would you like to introduce yourself?
Yes.
You are mute.
Like 2 years of video conferences and still doing the same mistakes. Sorry for that. Thanks for the welcome. Daniel Zacharias. I'm the founder and CEO of Stewie. What we are doing is basically focusing on K-12 administration, so everything from communication, organization, administration in schools in Europe, trying to automate a lot of processes and make, or hopefully make the day easier for teachers.
Mm-hmm. That's lovely. That's lovely. I've been following your work for a long time and hoping to get in touch with you. I'm very happy that we're meeting over here. Lovely. Next is Carla over here. I cannot see her. Is she there?
Yeah, I'm right here. I hope you can hear
Lovely,
me.
Carla, lovely.
Hi, I'm Carla Napoleon. I'm an innovation analyst covering Edtech at Derum. For those who are unfamiliar with us, we are a global startup and venture capital intelligent platform, which means that we provide data and insights on startups, early stage and growth company ecosystems. We cover Europe, but also the globe. And we also are partners with Brighteye and have a platform dedicated only for Edtech, where you can find the most recent developments, but also funding rounds, the most active investors, etc. I'm really happy to be part of this panel as well.
Really great to meet you, Carla. I've been in touch with the room for years now, since like it came first. Yoram is a great friend from Amsterdam days. Anyways, next, last but not least, for the investor perspective of the board, we have Alex joining us. Hi, Alex. Could you tell us more about yourself?
Hi. Thanks everyone for coming, and thank you for hosting the panel. So I'm Alex Latsis. I'm one of the partners at Brighteye, one of the founding partners at Brighteye with Ben Wirtz, we initially started the European Edtech funding report. I think it might have even been in the first year after we founded the fund. So the first one will have been 2018, because we realized that there was no repository of information for the community to assess the health of the ecosystem. And so we took it upon ourselves and made it our charge to report on it on an annual basis so that there was a frame of reference. And now, several years on, we're very happy that Reese has taken on the responsibility for himself and has been doing consistently a great job. And we're obviously very honored to have all of you on this panel. So thank you.
Thank you so much, Alex. Congratulations for the fourth report. I mean, it's great. And we love to see this report every year. And thanks a lot, everyone. I'm so excited to learn so much more from this impressive panel. So now to start with exploring the report and getting into the discussion, I would like to pick up the brain of Carla over here. And so basically the report highlights that of January 2023, there are 30 EdTech unicorns collectively valued at $89 billion. However, total of 6 companies joined the list in 2022 compared to 23 in 2021. But out of these 6, 2 were from Europe, which is flattering. So why do you think is the EdTech landscape in Europe changing so dramatically? Is there an important analysis you would like to share with us?
Yeah, thank you. Yes, thank you. This is a very good question. I think as an analyst, or at least at the room, we always try to analyze the sectors that we cover and put them in a more global context. So what we're seeing in terms of the global tech market is that in the first half of the year, the unicorn growth was more or less robust. And however, as the year progressed, the new unicorn creation has collapsed on a global level and across sectors. So this means that's not only impacted EdTech, but also other sectors as well. So the current environment kind of puts the highly valued private EdTech companies that haven't reached yet the unicorn status in a particular situation where they're sort of in this limbo, right? Where they are unable to access to public markets, to the current environments, but they also are finding it quite hard to rely on larger funding rounds at higher valuation than the previous rounds that have raised. So what we're seeing is that although EdTech, we still haven't seen a huge reprice of private companies' valuations, we might expect the same behavior as industries like fintech, where, for instance, we already started seeing companies like Klarna, for instance, where there's notable down rounds showing already drops in private market valuation. So we might actually see that EdTech might take a similar trajectory. Of course, these are two different, let's say, sectors that are growing at different speeds. But what we've seen in terms of the landscape of the European EdTech unicorn creation is that it might be that this year the unicorns might not be created at the same rate as the high in 2021, but we believe they'll still happen, just at slower pace.
Yes, I completely understand. Yes, of course, this year there is a crunch in terms of funding. Even investors are actually being very careful of investments. And yes, it will take time for EdTech as compared to other categories. But yeah, you have a point. I also want to talk to Alex about this. I would like to hear your thoughts on during the early stage of pandemic, when EdTech received more than 10 billion in venture capital investment globally in 2020 and 20 billion in 2021. But the sector is now facing a downturn. So something which Carla talked about. So how are the European EdTech VCs coping with the situation? And in what ways has this affected the growth of the portfolio? To you, Alex.
Thank you. Great question again. To touch on what Carla was saying earlier, private markets, there's always a lag between valuations in private markets and in public markets. And what we've had for the last 10 years is a very low interest rate environment. And obviously that's changed dramatically in the last year and a half. And so essentially what happens in the public markets is when interest rates are low, in some cases negative, you have a drive to stocks because people don't get any yields from bonds. And so there's a bunch of investors who are looking for yield and growth in the public markets. As soon as you have a higher interest rate environment, you have an increasing number of investors going to high yield bonds, which are more secure, less risky, less cyclical. And so you then have a recalibration of valuations in tech stocks and growth stocks. And that's quite normal. It kind of tends to happen in lots of cycles. So I think that it's inevitable. I agree with Carla that public market valuation haircuts are going to translate into the private markets. And I think that that's going to affect particularly post-Series B companies more than earlier stage companies, because historically, in EdTech specifically, early stage companies have always been less overvalued than other earlier stage tech companies. And that is, again, it's tied somewhat to the public markets because there are not that many corollaries in the public markets for price to earnings ratios and how to value and how to apply multiples to the sector. So in EdTech and in EdTech valuations, it's a lot more about underlying businesses, and it's a lot more about sort of more realistic valuation metrics. And so I think that, yes, we've had these, astronomical growth in the rounds raised by certain EdTech companies, and suddenly some of those might see, sort of difficulty raising at similar valuations or much higher valuations over the next few years. But at the earlier stage, we've typically seen quite conservative valuations of EdTech companies, and so I don't think it's going to affect, necessarily the sort of the earlier stage companies as much. There are always exceptions to the rule. There were many rounds that were raising at seed, very high valuations. But at Brighteye, we typically take quite a conservative approach. So according to your question as to how it affects our portfolio, it doesn't affect our portfolio that much, hasn't, because we are mainly an early stage investor. And I think that, typically we also are quite conservative in the way that we value companies. What's happening in practice in the sector? Many companies, as in broader tech, are realizing that they need to conserve cash. They need to maybe reduce growth rates. and they need to go more towards break-even profitability, in some cases even EBITDA positive financial results or profitability. And so what we're going to see over the next few years, it will be significant for VC, which is we're going to see private market valuations in VC looking, in some cases, a little bit more like private equity valuations, where we're looking at valuations that are based on EBITDA multiples instead of revenue multiples. And I think that's going to go across the board. We're going to see across tech, a move away from sort of revenue multiple valuation towards more conservative, either very low revenue multiple valuations or much lower, or ones that are either on modeled EBITDA or actual EBITDA. So in general, I think the space is going to get a lot more conservative, but because we've traditionally always been quite conservative around valuation, have passed on several deals because of valuation over the last 5 or 6 years, we're less, I think, susceptible to it. So it's going to hit later stage deals a bit more. And earlier stage deals, obviously there's lots of variance in earlier stage deals, but the ones that we're involved in, I think, less.
Yeah, latest.
That answers your question.
Yes, it does. The later stage deals more, and early stage more opportunities for them right now, as far as the climate is concerned. But this brings me to a thought, and my next question is for Alexia. So Alexia, you scored, as you mentioned, 2.2 million funding round, and I covered it. So if I'm not wrong, it's March last year, and the round was led by Enreach Ventures from London, who also invest in early stage startups. So one of the findings of the report say that 3 of the 10 biggest deals in 2022 were for European edtechs, including GoStudent, Yarn Players, Multiverse, and also Coach Hub. And all 3 were like male founders, if I'm not wrong. Could you share your empowering journey of getting investment for your early stage female-led startup? Over to you.
Yeah, thank you so much. It's an interesting question, that of female founders, and I always still am a little bit irritated when we keep referring back to female founders as female founders, because in the end we have founders just as much as men are. But I think the stats that we touched on in the report summary speak for themselves. If I remember well, it was 1 in 27, which is just so absolutely outrageous. We have been very lucky, I suppose, with my sister to have been surrounded by amazing mentors and champions very early on in our fundraising journey. And they essentially laid out a very clear roadmap to obtaining funding for us. And so I'd love to share potentially some tips and tricks from what I have been taught at the early stages of the startup journey. And I would split that into 3 categories. If you're thinking of fundraising and you're a founder, you need to think of outbound investor relationships, inbound relationships, and how to actually discuss the fundraising process during the calls. So if I start with the first one, outbound, so you reaching out to potential investors, that's something that is an ongoing process. I've been told investors don't put their money into dots, they put their money into lines. So if you meet an investor once, that is a dot. What they want to see is progress and seeing that that line is treading upwards. So make sure that even months and months before you're considering closing your funding round, you are building those relationships and that trust with the desired investors. It's really important to have warm intros. There's many studies that have been done on the higher success factor that you might receive funding if you have a warm intro. So make sure that you find yourself in the right rooms with the right investors. There's so many opportunities to get in touch with them, and don't be shy of reaching out. And I think for women specifically, this also means just cold email and on LinkedIn. A lot of people will get back to you and will want to champion you as a female founder. When it comes to the second category, which is inbound, how do you sort of create the hype for your round? I think it's very important that during the sort of 3 months before your fundraising round, everything is perfectly staged. You want to have as much FOMO as possible, as much momentum as possible in that small time. And so one of the tips that I was given is, if you have any type of press-worthy news, make sure that you don't give it to the press as it appears in your journey, but that you kind of hold on to it until you're ready to fundraise, so that the press picks up on your stories just as you're about to open the round and you're basically at the forefront of investors' inboxes. I think your reputation during those few months is everything. From what I've understood, investors all speak with one another. And so you want to make sure that when you're in this sort of active fundraising process, your pitch is ready and you're not using the first few presentations as practice, because those ones will definitely trickle down into the reputation that you will have down the line. And then I would say the last bucket, which is sort of like how to behave during the conversations. When it comes to being a female founder, it's really tricky because society has told us time and time again that we're not good enough, that we're too loud, that we're too this, to that. And from my understanding, investors look, especially at the early stages, for quite confident and knowledgeable founders. And so my sister and I always had this very non-politically correct slogan that we kept repeating ourselves before we went into a investor conversation, which was channel your inner Chad. Chad being the very sort of loud and arrogant lad that you have at university. Of course, the system is broken and we would have to really fix the way in which power is perceived and founder qualities are perceived. But as long as the system is the way it is, I think sort of more masculine and confident traits are overvalued. And so sometimes you just have to fake it till you make it, and make sure that each conversation is as enthusiastic as the first one, even if you've said the same pitch 150 times.
Yes, I understand.
So that would be my advice.
Sorry for interrupting. Yes, I completely understand. And I'm a female founder as well. I founded TFN 12 months ago, and I completely relate with your feelings. But I always say female founder because there's so many others over there who want this inspiration. And I guess you are the people who give them. So, but Daniel, my next question is for Daniel. And so you founded the company in 2018 to help schools with the challenge of digitization, which is not corporate learning. And the report clearly analyzed that corporate learning being the only vertical growing in terms of investment. So how important do you think is GovTech fits in the future of EdTech? And why do you think investors are looking for startups like S2A?
It's a good question. And it's definitely, I always say that, I think it's definitely one of the most specialized niche in EdTech. But the reason is why I think it's important is because I think most of the change which we need in education is coming from that department or from that niche. Because I believe, like, if you look only at numbers of time, how much a school wastes on time on a daily basis. There was a statistic from Bertelsmann coming out a couple of months ago. They said 7 minutes of every lesson is wasted due to organizational stuff. And if you calculate this with the typical earning per hour from a teacher, we're talking about like 80,000 euros, which is not invested into learning, but is more invested into operational stuff. And I think that is huge. And this is a huge problem to solve. And if we want to change education as an ecosystem, we also have to go down to the source, and that is definitely schools. And we're doing everything from pre-primary K-12, from pre-primary to K-12. And I think that is a huge potential there. And by showing that potential, what you can solve and what you can implement, I think that makes it also really interesting for investors. Because next to the huge market opportunity, you have stability factors, which are getting more and more important going into 2023. For example, you're signing long contracts. So churn rates, typical churn rate at STUI is less than 1%. You can grow the user base year after year. It's not so inflation driven or like other departments. And so I think there are several factors which make it a pretty stable investment and interesting investment, because I believe there's a huge market which we have to change education in total.
That's true. That's true. That makes completely sense. And I have another question for you. As we all know that many of the best companies are founded during the downturn. And which areas and sectors in EdTech are you particularly excited about?
Oh, it's a really good question. So I think looking also last year, especially the GovTech segment is booming. Potentially not in numbers already by funding, but if I look at some conferences and some people I spoke with about the last couple of months, I think there will be pretty exciting GovTech companies coming up, which really change the way how our political systems and how the government will work. And so I'm pretty fired up for that sector, because I believe there we need change, definitely, and fast. And so I'm excited on the Brighteye funding report for the next year, because I think it will be shown there.
Yeah, that's true. We all are excited about it, isn't it? Thank you so much. Carla, I have something for you. I wanted to have your perspective on this. That what do you think is the recent tech downturn? A pause before we return to a high growth, or a fundamental shift in terms of valuation and the ability to raise funds?
Yeah, I think as I mentioned and Alex developed a bit earlier, we definitely see that in terms of EdTech, we haven't seen a full reprice of private valuations yet, while compared to public companies, it was almost instantly. It's also good to reflect on the sector itself, where there's very few public companies. On the room, we trade around 60 public traded EdTech companies. And what we see is that it might be some adjustments still underway this year, but this will be especially for the larger stage companies. Of course, this will have an overall impact on the ability to raise funds. But in terms of what we can at least analyze from last year, and what the report also tells us, is that not all funding stages are being affected equally. So it's sort of these two growth trajectories happening within EdTech and also across other sectors. It's that late stage companies have crawled back to pre-pandemic levels in terms of funding, but then early stage is still showing growth in comparison to 2020, for instance, even if it declined a bit compared to last year. So I think it definitely does shift, let's say, the funding or the ability to raise funding landscape. At the same time, early stage still, I think we still remain quite bullish about those companies. And especially if you consider European EdTech, because it's still quite in its, let's say, nascent phase, which I think can tell us that more exciting innovation is happening, and companies will be able still to raise funds. Might take them a bit longer, might, have, I think maybe Alex have more insight on that, but I think it's not as the sector itself stop and it's going to shift everything. It's just the companies that are showing growth perhaps are the smaller to medium sized.
Yeah, if I can chip in here, you're absolutely right, Carla, and I think that EdTech has attributes that are sort of acyclical and counter-cyclical. So it's difficult. I mean, there are two aspects to EdTech which makes it rather difficult to predict what's going to happen in this cycle. So one of them is that EdTech companies, because of the relative paucity of EdTech companies in publicly listed EdTech companies internationally, as Carla has just said, generally speaking, EdTech companies have been valued on private equity type valuation methods rather than the sort of same methods that are used for the rest of the tech, the sort of early stage of private tech companies. And so that's meant that historically valuations have not been as high as other tech companies and the private markets, but it also means that they're going to reduce by less, right? So that's one attribute. The other attribute is that actually, if you look at what happens in economic downturns, generally speaking, people go back to education. So it has counter-cyclical attributes where in an economic downturn where people, where the opportunity cost of going to study is lower, you can, in some cases, like in 2008, 2009, 2010, you had lots of people returning to education. So you actually see a counter-cyclical kind of effect where education companies can grow in those periods. So it's very hard to kind of say exactly what's going to happen. But one thing's for certain, that every tech company, including edtech companies that raised very high valuations over the last two and a half years, will struggle to maintain valuations at that level, and we'll see some sort of calibration. Sorry to butt in there, but I just wanted to add to your thoughts, Carla.
Thank you so much, Alex and Carla. I think it's time to wrap up the discussion because I think we just didn't realize the time and it's almost an end. And I want to thank you everyone for contributing such insightful perspective to our discussion. Lastly, I would like to congratulate Brighteye VC for curating such an informative report. And over to you, Reese.
Thank you very much, Kancha and the panel, for those excellent remarks. We really hope you enjoy the report. We'll make sure the recording is available in the next few days in case it's helpful for you to revisit anything mentioned in the event, whether that's Alex's comments on the relationship between public and private markets, Carla's predictions that early stage activity will intensify in the coming months, Alexia's guidance on how to raise, or Daniel's bullishness on GovTech. Thank you again for attending and have a lovely afternoon, and we hope you enjoy the report again. Cheers.